Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So if yesterday on the forex market we were considering the situation in the global economy, including the United States, that's where I updated some moments on real estate market, showing that the bubble there is already blasting up. This is the first market where a blast has come, although we thought this maybe in the stock market should be earlier, but now it's first come in the real estate. And also we have shown really tricky situation around household wealth, with drop savings to the record lows, while households currently is trying to replace and to keep the habit consumption level by using the consumer credits. And this really put the tricky situation for people and households, especially among the most poor ones. Today, we mostly in the gold market have considered the political issues that definitely will make impact on the gold market in the near term, and also explain why Japan currently has no way to exit, why the Japan now stands on the dead way. And although we talk a lot about the United States crisis, United Kingdom problems, the bond market, the European Union problems, but in fact, Japan actually could become the trigger. It could become the first brick in the dominoes effect, and I will not be surprised if everything starts from the Japan collapse. So we will see. Speaking on the technical side, we yesterday have come to conclusion concerning the Fed that it is too early to suggest the Fed pivot. We think that it should become a bit later, because Fed actually has significant reserves. Overall market, although it starts to show some signs of weakness, but employment stands high, consumption stands relatively modest, so they could follow the tightening cycle for a while longer. And actually the same conclusion did the Bank of America. It's also said that it's too early to expect the Fed pivoting. That's why we think that the nearest term the gold should remain under pressure, but that doesn't mean that we do not consider gold as attractive for a long-term investment. I think the gradual investment in gold currently is, well, it's a good decision, especially in the physical gold coin, bullions. So this will be just safer to deal with than to deal with the futures market. So it could be under pressure within the 2-3 months, and maybe it even will drop for $100 and $150 more. Volatility could increase, but well, in the longer term, for long-term investment, this is very good price in the current circumstances. Still, its current fundamental background makes us to keep valid potential bearish pattern on the daily chart. On the weekly chart, it could seem that it might be the double bottom, but with its recent performance in the last 2 weeks, which was really weak, I suggest that it seems that's more chances on the collapse, especially if Fed will be as aggressive in its statement as it was previously in the last Fed minutes. So that's why gold still could show the downward direction, at least based on this performance that we see. Besides, on the hourly chart, market was not able to complete the minimum conditions to remain bullish. Recall what we say: perfect condition that brings no questions if market will stand above the nearest confluence. Second confluence, it is worse, but it's still more or less acceptable. But what we have currently, market has broken through the first confluence, which actually was also in agreement with this minor ABCD. Market has broken the second confluence, which was agreement with the XOP, and market has broken through the AB equals CD, OP directly right to the 618 level. Take a look at the acceleration of the CD leg out, and I would ask you, could you call this performance as a bullish one? And take in consideration that it's happening in the final stage of the bullish reversal pattern, which is totally contradicts the normal logical way of the behavior. That's why I'm really skeptical on a potential bullish reversal here, and I would suggest that we have more chance to see the breakout and action back to the 16, even 1650 lows. So personally, I would watch for a breakout of the 1640, and of course currently I wouldn't consider taking the new long position. So that's actually what we have currently on the gold market.